Well, thank you so much to everybody. I'm super excited, super grateful. And I was just today, I was thinking about the way that we met each other here. And it's amazing how can things happen in life because the three of us, we were, I think that we were working on this project even before we decided to team up. And and j just to give everybody an idea, I met Maggie in March. I did a multifamily boot camp in March, and she was there, and she was like so committed, so involved, so focused, and I really enjoyed it. And in one of the coffee breaks, she asked me, "Have you thought to set up an open fund?" And not necessarily a syndication because it was a multifamily bootcamp, so we were talking about syndications a lot. But she asked me if I was willing to set up a debt fund, and I told her, yeah, absolutely. I've been thinking about it, but I wanted to do it in a different way, not just to give the opportunity to people with big pockets, but also for the small guy. But it was so difficult at the time because I was sitting down with lawyers, attorneys, and we were trying to set this up. But it was very challenging, very difficult, very expensive. And but anyway, Maggie and I, we just continue. We were like in trying to figure this out, and and uh, and then I sat down after I sat down with a couple of attorneys. A couple of weeks later, I was introduced to fractional. And while all these things were happening, I went to Monterey a couple of months ago and I sat down with Chris. By the way, Chris and I, we met in Puerto Rico 2 years ago. We went to,
I'm
we
not
were
Puerto
in,
Rican.
no, and we
Alexis is.
were at Jerry Norton's hotel, and we were in a marriage retreat that Jerry did, which is it was phenomenal, and we connected very well. We went out to dinner. Our spouses had a, we spent a very good time together, and but we just became friends. We never did a business together, and couple of years, passed by, or 2 years passed by, and then in Monterey, we both are in Owners Club, and then in Monterey, we sat down and I asked Chris, "Hey, what's your Mount Everest?" And for those who don't know what the Mount Everest is, this is something that Pace taught us a year ago. That basically, a Mount Everest is this big, big, big goal that we want to accomplish, let's say in 5 years, and it's not a typical goal that we're going to accomplish in a year. It's like these big, big goals that shakes you, that it's big, and maybe it's in our mind, right? At some point we're going to accomplish it. But anyway, I sat down and asked Chris, what's your Mount Everest? And he says, he goes, well, my Mount Everest is to address affordability for 1,000 individuals by building a scalable co-living business model that provides high quality, affordable housing solutions. And the vision isn't just about real estate, it's about creating community, stability, and opportunity. And by doing so, I aim to generate $250,000 monthly in free cash flow, providing that impact and profitability, and that can go hand in hand. And when he says that, I was like, oh my God, Chris, you don't have an idea. That's exactly the same Mount Everest that I just rode a year ago. What if we team up together and we scale up this mountain together? And that's how this group was formed. So a little bit more about me. Uh, my name is Alexis Jimenez, and I've been doing real estate since 2012. I've been doing, well, at the time I was doing fix and flip. I was doing, well, just fix and flip until 2017. I'm originally from Puerto Rico, and besides real estate, I own a couple of businesses. And at the time, I still own a tech company. And then in 2017, when the Hurricane Maria wiped out the whole island, basically I lost everything in 24 hours. So, and when that happened, the same day, I told my wife, you know what? We have been fixing and flipping properties, and we have sold them all. We don't have anything in our portfolio. What if we start buying and hold and create cash flow over time? And that way, we don't have to have all the eggs in one basket. So we started buying single family homes, duplexes here and there, fourplexes, until then in 2022, I joined the first syndication group, and we syndicated a large asset, a multifamily large asset, actually here in Atlanta. Then I continued doing that. And then, well, at some point, the interest rate started to increase. Everybody knows this story, right? But then in 2024, I was looking for an asset class that provides a cash flow, high cash flow, or high cash on cash returns. And of course, co-living nowadays is one of the asset class that provides the highest cash flow. That's basically my story. I don't want to get into in details because that's not the whole idea of the presentation, but I want to, my partners, they can introduce themselves. So I'm going to allow Chris that he can introduce himself.
Awesome. Thanks, Alexis. And like Alexis said, it was awesome coming to that realization that we were really both running in the same direction, and we knew each other, we supported each other, we'd given each other ideas, and we didn't even know that we were running together yet. And that's one of the amazing things about the Sub 2 community, the Owners Club community, that any and everything you could ever need is like a person away or a connection away. And we were right there. So I've been in real estate for what, 7, 8, 9 years now. We started in with small properties, single families, duplexes, small multis. Started a construction company, regular flipping on the side. I was in healthcare for a number of years, and then made some great connections and moved into the multifamily space. And as we know, multifamily is a great asset class to deliver, long-term gains, cash flow on a monthly basis. Single family homes are kind of their own animal, right? You can take them as Alexis did, and we've been doing. We can add value to them and resell them, or we keep them and let them appreciate and pay down over time, and we give somebody a quality place to live. I've always loved single family houses. I've loved the creative side of them, reinventing them, creating value in them, and we did the same in multifamily. But as we've moved over time, and I keep getting pulled into single family houses and interest rates go up, we too have kind of had to ask the question, like, some of these properties that come can be useful and they can serve the public and their general communities, but the position they're in doesn't work. Like, they aren't positioned as a flip, they aren't positioned as a long-term rental. Can we do something better and meet really a growing need, which is the affordability crisis in a lot of big cities? So moving into co-living was really a no-brainer. It's like taking the multifamily returns and aspects and putting them into a single family house. So my my talent, I would say, is solving puzzles and problems, finding solutions. In fact, my wife says I find solutions to problems that don't even exist yet, to my own demise. Um, so I'm just so excited to team up with Alexis and the rest of the team to do more for the communities that we're targeting, and create space for people to live.
Thank you, Chris. Maggie, your turn.
Okay, my background is as in accounting and finance, but in 2016, I started my journey in real estate, which I love it because my passion is make an impact in community. And basically, when Alexis, we get together and we talk about how can we help people not just to get a house, but how people that doesn't know how to invest and want to get into real estate, how can we help these people? And that's how we started talking about the fund, and the fractional came across, and this was a good opportunity for us, and also for all those investors that probably they want to start it, but they don't have like a lot of capital to start with. And after I started doing flipping like single families, and then I moved to a multifamily space in 2023. And as an investor, I do private money lender. That's what I'm doing basically right now.
Perfect. Thank you, Maggie. And of course, we have more people in the team. So basically, collectively, our team brings together decades of experience across acquisition, construction, property management, finance, and transaction coordination. And together, we have managed and repositioned hundreds of single-family homes, multifamily units across multiple states, directed millions of dollars in renovation to maximize value, built portfolios totaling over 500 units and over $60 million in assets. And this proven track record reflects not only individual expertise, but also the collective strengths and synergy that powers our mission. And this is the three of us, but also we have here in this call, we have Mel and Matea. They are part of the team because something that I am very cautious with is that, for example, when I'm doing a new asset class in my real estate journey, before I start raising capital, I want to do it by myself. And that's how I started the co-living business model. So first property, I purchased it by myself with my own funds. And along the journey, I understand, I developed skills, understand the business. And of course, I developed relationship like them. And they have been managing my co-living assets, and they have been doing a phenomenal job. They are in the Atlanta metro area. And if and also Darina and Chelsea, they're here in the call as well. They do transaction coordination, and been in sub2 for the last 3 years. I have worked with a lot of TCs. They are all good. But when you found this, diamond, this phenomenal group to work with, is when you decided, you know what, I'm going to stay with them. We're going to develop the business with them. And in the last maybe 6, 7 months or so, we have been working together on a couple of acquisitions. So I'm super grateful for all of them. And thank you for supporting this call. Chris.
Yeah, and just one last note on that. One of our big goals right from the get-go is that, if we're gonna do this, we're gonna do it right. We're gonna bring in high impact A-team players. And we've really done that from all regards, from Alexis's background, my own, Maggie's, and then Mel and Matea are like just over the top amazing at what they do. Like, there's property managers out there, there's TCs out there, and like Alexis said, some of them go above and beyond the typical expectation. And when that happens, everybody wins. We know that we have our bases covered, and we create consistency and expectation in everything that we're doing. So blessed to have kind of all of our corners covered when we look at investments like this, because we're looking to work with you guys to bring you into the club, to pull back the curtain, show you what's going on, how we're looking at properties, analyzing deals, how we approach co-living properties, and we want you to have the best possible people chiming in as well from all of those. So what we're setting up in this club specifically is something different. There's a lot of people doing co-living. There's people doing debt funds. There's people doing equity funds. And this was an idea of Alexis's. why don't we take like the best of all of these things and put this together? And so we created this hybrid approach because you could go invest in or become a member of a debt club, right? You put in money and you get return on your cash every month at a certain percentage, but you never really get the benefit of equity over time, right? You only get one part of things. On the flip side, you might go into an equity fund and then you're just at the mercy of the performance of the property, right? Or the investment. It might take months or a year or years for that equity to start paying off, for you to start getting cash back, for you to start getting return. And so there's benefits of both. And we've tried to look at this and say, how can we combine them together? So what we're doing with this club is giving a basically two-phase process. When you guys come in at the beginning, we will be identifying and then purchasing two properties in this club. And we'll have front-end costs to buy the property, all of the typical expenses. And instead of you just coming in at equity and waiting for a year until the properties are profitable, we're going to give you the benefit as a private money lender would have, and at a very healthy return of 15%. So right now we're anticipating and targeting, I should say, a 6-month period where the fractional club, all of you coming in together, are going to be essentially a debt investor, a private money, 15% return for 6 months. If the project ends up taking a little longer, you'll continue to receive those benefits. Once 6 months has hit, or we've transitioned the property to being operational, we've filled it with residents, now we're going to convert your position into an equity position so that you can start gaining equity cash flow, equity benefits like depreciation and appreciation, all of the normal things that you'd have. So you both get a healthy return on the front end, something consistent. We'll start paying out quarterly right from the beginning. And then all of the back end things that you would hope in being a partner really in the properties with us. And then our target is a initial 5-year hold. That's a projection. Obviously, we're going to analyze things along the way. If we see there is a reason to make a shift before that point, then we'll bring it up to the group. Maybe we have a tremendous opportunity to capitalize and sell, an opportunity to refinance, pull money back out and get it back in your pockets. But that's the initial target. At the end of that period, then a couple possible directions things could go. We could refinance out, get you your equity back. You could decide to invest with us in another property project or do something else. Or we might just sell the property, right? And everybody takes their cut, win, and we move on to the next. So that's kind of a general overview. What's a little bit different about this club in particular? Alexis, I think you're muted.
I mute myself, sorry. Okay, now I'm back, right? Can you guys see the presentation or not yet? There you go, right?
There we go.
No.
Okay, perfect. All right, so what market? That's one of the biggest or main question people ask all the time. Well, the market is going to be Atlanta, and there's a lot of reasons why. First of all, I already invested in Atlanta in multifamily assets here. I have single family homes as well, and I also have co-living properties here as well. So I have three different asset class here, and the performance has been amazing. Also, Chris has a lot of experience here in Atlanta, and Maggie as well. She has invested, I think, that in 2 or 3 deals here, multifamily deals in Atlanta. So, but besides the experience that all of us have in the market, of course, Atlanta, it's a phenomenal market. The economics are amazing. So, for example, one of the things that I'm always looking at is the demographic, right? So the median household income in Atlanta, it's almost $82,000, and the per capita income is $64,000, and the median net worth is around $300,000. And why this is important, because that tells you that the average family can pay a typical rent. And of course, if we're talking about co-living, which is the average rent is between six to 900, sometimes 1,200 per month, is very affordable for them. So on the education, well, you guys can see I don't want to stay here a lot in this slide, but there's a couple of, key facts like the population, the median age, the household income, as I mentioned. Um, there's more white collar people, blue collar people. There's a lot of things happening here in Atlanta. And another thing that it's making me very, very excited, because we shouldn't see only what's going on now or what happened in the past few years, but also what are the things that are coming up to the city. And one of the things that is coming up to the city, which is next year, 2026, is the World Cup 2026. This is a big event, and of course, like events like this one in any city around the world is going to cause a great economic impact. And well, in this case, it's going to be in Atlanta. So we are playing not only the cash flow game, but now with things like that, we are playing also the appreciation game. Um, for example, this what's the expectation or what could happen with this World Cup to 2026 in Atlanta is $500 million for Georgia, 415 million specifically for Atlanta, the economic impact. Expected visitors, over $520,000, spectators over 31-day tournament period. Job creation, more than 185,000 full-time jobs projected across the entire US tournament. Of course, tourism, a lot of people traveling all over the world, and these people are going to stay in here in the Atlanta area. Of course, the infrastructure advantage, existing world-class Mercedes-Benz Stadium reduces hosting costs, and the global marketing, billions of worldwide TV viewers providing invaluable international exposure to the city, which, this is phenomenal. Of course, these are projection, but if we go back in history, we can, well, I missed this one, long-term legacy, which is enhanced the reputation for mega events and future business investment attraction. So, of course, these are projection, but if we go back in history, we can see that, for example, in the 1996 the Olympic Games, they brought into the city $5 billion in economic success, more than $9 billion in additional impact since then. In 2025, the CFP National Championship, over 75 million in economic impact. Beach bowl events, and we can continue, on and on and on. And of course, this is common sense. Anytime that we see these types of event in each city around the world, we see a big, big economic impact. So this is one of the things that, Atlanta always been having a good track record in real estate, but I feel that what's coming up in the next coming years for Atlanta is going to be amazing. And I really want to be part of this game and part of this journey, and hopefully you guys have the same feeling. So, Chris?
Yeah, and I think one other key takeaway, other than kind of the future prospects of owning property in the market, is like Alexis noted, the co-living properties are really set up to serve the population that's being priced out of typical living situations, right? Blue collar individuals. Who do you think is most of the jobs coming in for building out infrastructure and resources and things for those sort of events? They're blue collar people, right? They need a place to live, and when economic activity drives things up, it drives up home prices and it will drive up rental prices, which means all of these people are going to come in. They're going to need somewhere to live. And as they build up the infrastructure, they're at the same time going to see rental prices going up and up and up and find it more and more challenging to find housing. This is why it's so important that we create opportunity for good quality living situations at an affordable price, and where we can take homes like these and make them even more useful to provide those environments. So, like we said before, we are really prepared and ready to jump on a number of potential properties. Alexis is going to talk about that in a little bit. But I wanted to give a little bit of framework of, well, what is this going to look like? So right now, we have a property we're going through conversions on in Union City, which is on the southwest part of Atlanta. And our goal was to, as I mentioned, provide a nice, updated, clean living space in a good quality home. So this is actually a picture of the home that we're currently working on. Nice neighborhood, but space and situated really well for this to work. These are actually some of the current finishes in the area. So we're finishing out bedrooms in a way that like I would want to go live in, right? People can come home, they feel good, they feel comfortable about what they're living. It's not dirty and dingy and the slumlord type of property that you'd think somebody might need to turn to when they can't afford rent. So this one was originally a 5-bed, 3-bath, 2,600 square feet, 2-stall garage. And we're often looking for garages and square footage because we can take those spaces that were shared communal spaces and we can create now somewhere for somebody to live. Because most of these people they want their own place. They want their room, if you will. They need a kitchen, bathrooms, privacy, but they don't necessarily need a living room to hang out with. And so we're taking living rooms, dining rooms, garages, and converting those. So this one actually is going to end up as a 10 bed, and we're expecting 8 bath. We're targeting 7 en suites, so bedrooms with a private bathroom. This is something that's we've really been trying to steer towards as much as we can. In a lot of co-living situations, there's bedrooms at a little bit lower price point and a shared bathroom, and that works for a lot of people. But there's definitely appeal to have your own bathroom, right? Then you have your kind of full private sanctuary, your bedroom, your bathroom. So this one is set up well to be able to do that. We're taking areas like a closet up top, creating a bathroom next to another one. We're taking a very large shared bathroom and looking at splitting it into 2 so that each of these bedrooms have their own. And in fact, this primary bedroom is so big that we may even target this, making it available for couples, which is a new thing for co-living. We haven't finalized that decision, but it's a possibility. On the main floor, as you can see in the bottom left-hand corner, we took a garage and broke it into 2 bedrooms and 2 private bathrooms. We took a dining room, turned it into a bedroom, same thing with the living rooms, and even given some private entrances, which is also appealing. So our goal, again, create a really nice space, and a space that people not only want to move in, but Mel and Mattia could attest to this. We want to create spaces that people want to stay in. That helps to really make the projects viable and perform well over time. But this one, this is kind of a sample breakdown of this property that we already have, we're already working through. And if this was a property that the club purchased, and the way we're looking at purchasing is making a standard traditional purchase, getting a fix and flip loan to buy the property, renovate the property, and then we're going to refinance into a long-term DSCR loan. So if we were to do this on this particular property, For that zip code, that area, the level of finishes, we've got what we're projecting for average weekly rates. We're being conservative at an occupancy rate of 90%. And so this property is projected to bring in about $11,000 a month in total income. And then we've got fees to pad split for their side of managing the clientele and making sure that everything is operating well. They're doing marketing to bring people in. And then Mel and Matea come in as the property manager, really, again, over the top service to really treat these individuals well. In our own company, we always refer to them as residents and never tenants, because we really believe that they're residing as this is their home. And I know that Mel and Matea really share that sentiment on how they approach things. But we're taking care of the home and the few general spaces. So really that's hallways, a kitchen. So we've got housekeeping that we'll bring in a couple times a month, landscaping that we'll take care of, pest control. We're taking care of general maintenance and CapEx. This is a newer style build home. And so we don't have the expenses of a 100-year-old home to account for either. And then we're paying for utilities, sewer, water. We're providing internet. They're basically paying rent to have the room. We're furnishing it for them. They're bringing their own sheets and own personal type tastes, but we're even going to decorate it and make sure it's ready to go for them. Kind of like what you would want in an Airbnb that you are going to keep living in, right, for 6 months, 12 months. I think Mel and Matea's track record is something like 14 months on average, which is way above typical for these sort of projects. And then for our expenses outside of operating, we've got a mortgage to pay, insurance, taxes. In the scenarios we're looking at, not a potential seller finance, but we might run into a situation where that comes into the picture. At the end of the day, though, not accounting for upfront cash needs, potential cash flow of $4,500 a month. So in this example, over a 5-year time period, say this was the property that one of the 2 properties that the club purchased, for our investor club that will receive 30% equity in our projects. We have appreciation, potential depreciation totals, principal pay down, cash flow, a total ROI of 167,000. That percentage being 95% over that term. Now, these are projections only on this house, right? They're a little bit healthier. We've been more conservative in what we're presenting to the club, but sometimes you find a really exceptional property, and we are going to go to whatever extent we need to deliver that to you guys. Location is key, though, to meeting demand. Again, these people are in blue collar type situations. So this example property is in a nice neighborhood, but it's really close to a lot of important things. We've got an Aldi down low, a Dollar Tree, groceries, things people need to buy. Walmart is right close by. There's several other manufacturing. So people in these sort of living situations like often to live close to where they're working, or at least be able to get there easily. So we're not looking at properties that are way out into the suburbs, right? That's not where these sort of properties do well. We're going to be very intentional about where they're located, the type of properties that they are, how we finish them, to make sure that they're going to perform to expectation. And like I noted, our goal is to finish these out to the level that I would want to live in, that Alexis might want to live in. They're just a very certain style of home. And we can move on there yet. So what are our projections for the club itself? So we know that Atlanta has been growing and has from a conservative standpoint, expecting 6.3 annualized over the next 5 years. And so what we could potentially expect for appreciation, tax depreciation that we had noted, principal pay down. And again, these numbers are a little bit different from that example property because that was a real tangible property. We're targeting more conservative numbers as we look at potential properties. But we're projecting for you guys as coming into the club, cash on cash return of around 9% and an ROI of 17% combined with that hybrid situation. So some of the numbers, and we'll breeze through these kind of quick, but these are our projections for the properties that we're going to target, and we're going to target properties that would fit close to these models. So potentially a 10-room property, 6 shared rooms, 4 private bathrooms, yearly gross occupancy, total gross rent of $123,000. And then again, breaking down what we'd expect for fees, as an example, a net cash flow of close to $50,000. So we've talked about kind of what are the possible returns, but it's just as important to talk about the risks, right? Nothing is guaranteed in any club investment thing you get involved in, but we've always loved real estate because it's real, it's tangible. People are going to always need places to live. And in Atlanta, this need is going to continue to grow significantly. But for what we're planning on our initial needs or funds we're putting away, we'll be putting away contingency reserves. If we have changes in vacancy, if it ends up costing a little bit more on renovations, and we already have a healthy buffer built into that. Pad split leasing model is very healthy. They have a really good screening process. Mel and Matea have taken that to a whole new level to making sure that we get good people in the properties. And then we've got people in the area that understand the permitting process, the leasing processes, so that we can get ahead of the game on those things, and that we're managing things professionally, right? Alexis and I know what we do well, and we're probably capable for some of these things, but we're firm believers in bringing in high quality people in every seat, so that everyone's an A player and none of the positions are getting shorted, if you will. Preston had a question about city zoning changes. Mel and Matea, could you speak to that a little bit?
So changes, I'm not exactly sure what you mean by changes, but there is an ongoing relationship in, with pad split and local municipalities. So yeah, I mean that's part of what makes this market really good. Is it's maturing, and it is mature. It's going to continue to mature. So we manage 100 pad splits at the moment, and have really had a small amount of issues with zoning. Not to say it doesn't exist, but that's also a risk. But we simplify it.
And I think this is one of the reasons too why we really like Atlanta. Atlanta is really the birthplace of co-living. You could say pad split is based there. There's a very strong relationship between this model and the cities. The metro area and the cities, some of the municipalities are obviously on their own and a little bit different, but they really recognize this need and this problem in the city, and how important it is to create these sort of opportunities, because the city cannot provide enough housing or the right kind of or quality housing for the current needs, especially for the influx that will continue to come. As Mel said, there's always a risk in some of that, but we believe we've hedged a lot of that because of the location and the area that we've targeted. And Mel and Matea are deep seated into what's happening with this, as well as some of the real estate agents that we've been working with. And so they're also going to be critical to help guide us to which parts of the metro area are going to be the best to approach, and which areas have more potential for risk when it comes to, say, a rezoning or problems or things like that. So we can calculate. We're a little more calculated going in than just saying, "Hey, somebody sent me a deal." Because a wholesaler found it and they sent it, and hey, the terms look good, so I'm just going to jump on that one. Our goal and our intent is to be extremely calculated and discerning when we're going through properties. But great question. I'm glad you brought that up.
So being here, because I live in Ohio, but I came to the city a couple of days ago, and I already walked between today's Wednesday, between Monday and Tuesday, yesterday. I walked 17 properties already, and we have so far between 5 to 6 on the pipeline that we are very committed to submit an offer in the next couple of days. And so while we have seen a lot, we have seen properties that definitely doesn't fit our model, but those 5 or 6 definitely fit our model, and we are running numbers and making sure that um, these are the properties that we can take over in the next couple of days. This is this last slide, and basically these are the investment next steps. We are looking to raise $350,000 to purchase two property. The minimum investment in the club is 10 grand. Um, and basically these are the number if you invest $10,000. Basically, as Chris was explaining, the first couple of months, and I don't want to commit to 6 months. This is only an example because that could happen in 3 months, or that could take longer. It could take 9 months. The good part of it is that because it's a hybrid club, you can get interest only passive income during this period. And then once we are ready to convert or ready to stabilize the property, or start to fill in the property with tenants, is when now the debt or your investment on the debt side of it, it's roll over into equity, and now you own equity on the deal. I did another example here. This is if you invest 100 grand, but of course, this is all proportionally. You can invest 15, 20, 50, 50,000, $1 million, whatever the amount you want. This is an example. Let's say if you invest $100,000, so then the projections are that you'll get 7,500 interest only for the first 6 months, assuming that in 6 months we complete the renovation phase. And then once we roll over that into equity, you'll get $38,000. And then once we sell or refi, depending on the case, you'll get capital gains as well, which is at the end is a 55% return.
I'm going to
So
put a quick
yeah, go ahead.
timer on that, Alexis, because somebody will notice. This last slide actually didn't get fully updated, so these are below projections on the actual returns. So we'll get updated numbers. We had them in previous ones. We'll make sure that they're in the project itself, but actual total ROI percentage is more like 85% over the 5-year period.
Yeah. So Kyle, you can take it over.
Thank you, Alexis and team. Appreciate you all. If anybody doesn't know me, my name is Kyle Brennan. I am the Director of Investments here at Fractional. And these fine people are hosting their club on Fractional. So let me go ahead and share my screen and I will talk you through how to invest in this opportunity, talk to you about Fractional, and answer any questions afterwards. Alexis, do I have, or in team, do I have your permission to put the Fractional project in the chat?
Yes.
Let's make it live. There we go. It's in the chat. And I'm going to be sharing my screen, which shows that page that I just put in the chat. And you can see my screen. So all the details the team just went through, excuse me, just exit out of those. All the information is written out very expertly here. You can review this at your own time. And Alexis, maybe tomorrow or later tonight, you can post the deck you were reviewing, so that way people can look through those slides as well. Perfect. Okay, so let's focus on the blue button and then what does Fractional do? So to invest in this opportunity, you will click the blue button and this screen pops up. As I mentioned, this project has a $10,000 minimum. It can be 11,000, it can be 100,000. It just has to be above $10,000. And then this here is where I want to focus. So if you are new to Fractional, welcome. Really happy you're here. These buttons will say verify. So you need to verify your personal identity. That's with your social security number first. That's because a lot of things are happening online. We just need to prove you are who you say you are. You're going into business with other people, so you just need to prove your identity. Once you've done that, then you can go into the Manage button. You can set up a business entity with an EIN, checkbook IRA, custodian IRA, 401ks, and things like that. So let's go ahead and just select individual and continue to payment. So here you'll see that my $10,000 is equal to 2.85% ownership. And that's the ownership of the LLC, which is then partnering with Alexis and the team. So I'm going to pay my 3% lock-in commitment. This is my commitment saying, yes, I'm going to invest with you for $10,000. I'm going to put $300 down to hold my spot, and I can pay that with a credit card or a bank account. Quick notes about this. The 97% investment must be paid via ACH or wire, so it cannot be a credit card. And if you are investing with a custodian IRA, you'll make your deposit with a personal credit card. Our closing team will work with your custodian to release the 100% of the funds. And then once that's happened, we will reimburse you your 3% deposit. If anybody has any questions about that, happy to connect with you offline and walk you through it. Just make sure you're checking that box down here and then click to make your deposit. So what does Fractional do? So we are the platform that's facilitating this club. And then we will create, let's see, a 350K, $10,000 minimum. Let's say that there's 35 investors at 10K. Fractional will create the LLC that those 35 investors will own. And that LLC is what's going to partner with Alexis and the team. So Fractional stays on to do the taxes and compliance of the LLC. We'll do the K1s for all the investors. And then we're also the platform where the community is hosted. So you'll have your own private page where you get to talk to each other, post updates, come together, review P&Ls, go over your quarterly reports and payments and disbursements, and just have that digital footprint of your community. So I'll go ahead and put my email in the chat and happy to answer any questions.
Awesome, and we're really excited to partner with Fractional on this opportunity. They really have a streamlined process to take care of you guys coming into the club, making sure that all of the nitty-gritty details, the accounting, the forms, all of that is taken care of, right? So that you don't have to go try and figure things out on your own. And there are checks and balances for us too, that we can hand that piece off as the experts in this part of the project. Again, that really has been our focus on creating an all-star team, really from all regards. So I think right now we'd like to open it up for questions. Again, we've got a limited amount of opportunity in the club, and it is first come, first serve. I know Alexis already has people interested looking to contribute large amounts. We do have a minimum of 10,000. And there's a potential we may increase the minimum here as the weeks go by. But once the once the club is filled, it's filled. So Preston asked, what's the deadline? If it fills up tonight, then the deadline is tonight. If it fills up in a week, then the deadline is a week. So it just kind of comes down to who jumps on soonest to the opportunity. What other questions do you guys have? You can drop them in the chat, or if you want to hop on and ask directly, we'd be happy to unmute.
Unmute yourself.
Hi, Chris. I just want to ask you, what happened with the property after the fifth first years? Excuse my English, by the way.
Yep, after the first 5 years.
Yes.
So we're planning to reevaluate at that point. The commitment to the club is for 5 years. So at 5 years, one way or another, we either need to get you your cash back or get your commitment to keep things going. So we would anticipate a couple possible directions. Either we see, hey, this is a cash flowing monster. It's continuing to appreciate. We love the direction it's going. We're going to keep it going the way that it is. And some people might decide, hey, I want to move on to something else, and they want to pull their funds out, and others might want to stay on with us, and we'll provide opportunity potentially for either direction. Or we might say, hey, there's a lot of demand for this kind of property. It's done really well, but we'd like to move on to other things. We're going to sell the property. Okay. And the property sells, and all the ownerships get proceeds of their share, right? So the 30% ownership group gets 30% of the net proceeds, right? If you as an individual have a 2% share, a 5% share, a 10% share inside of that 30, then that's the amount that you would walk away with then. Does that answer your question?
Yes, Chris. Thank you.
I see a good question here, Kyle, from Ellie. Will investors be on the title, or how will it work for the ownership?
Yeah, it's a great question. So we'll work with the project leader team to figure out what LLC structure they're using. Typically, we see the fractional LLC joining their LLC as the owner, the percent owner, and then you'll have ownership of the deals that way. Or we see their LLC joining the fractional LLC for their ownership percentage, and it's just one of the two. Or the two LLCs could own another LLC that then owns the assets. So it's something the back end team will figure out with the project leaders.
Yeah.
And then I just want to sorry to interrupt. This meeting is I made a mistake, and this is going to end automatically in like a minute. What is the best way for people to get in touch with the project leaders if they have any other questions?
The best
ahead.
thing to make sure you're registered, jump into the project and make comments on the fractional project page. Then two, we can address those for everyone to see because they're often common questions. If it's a personal question, then we'll get our contact info in there or a means via fractional to reach out to us individually.
Yeah, and I'm recording this, so the recording will be shared with everybody tomorrow. The team will have your contact information, and they'll be reaching out to you as well.